Welcome to this video day. It is Sunday, 24th of June. We're going to be looking at the Japanese yen against four other currencies. They're going to be the EUR, the USD, the AUD, and the MXN. Now, in terms of the Forex markets generally over the last few weeks, we haven't had too much volatility. I think that is going to change. I think the yen is going to benefit, and we really like the look of the yen long term. We think it's going to strengthen considerably against most other major Forex pairs. Now, I'm going to move to the charts in a moment. When we're doing the charts today, we're going to be looking at the weekly chart, the daily chart together. Weekly chart gives us the big levels, okay? Gives us the bigger perspective. If the levels are backed up by the daily levels, that makes those levels really valid. We want to come off levels that we know big institutions are going to come off. And we want to, basically, when we're doing the charts, always keep in mind what the smart money is doing. Now, we're going to be using, as regular viewers know, our favourite tool in Forex trading, which is the COT, the Commitment of Traders Report. For those of you who don't know what the Commitment of Traders Report is, there's a link underneath this video where you can learn more about it. But just in brief here, what we like to do is always be trading with the smart money commercials against the non-commercial speculators. So I'm going to now move and do the charts. When I finish with the charts, I just want to come back and sum up. And I want to discuss a theory which any trader, doesn't matter what type of Forex trading strategy you've got, okay, you want to keep it in mind. It's called Occam's razor. So I'm going to discuss that a little bit later, but now let's move to the charts. And the first one we're going to do is Euro JPY. We're on the Euro JPY weekly chart, and what have we got? CFTC net traders ratios, non-commercials 3.9 to 1 in terms of longs over shorts, commercials 3.4 to 1 in terms of shorts over longs. We've got a ratio of 7.3, and this ratio is building up since we broke above this level. And you can see we're kind of seeing this now as support 124. Obviously, resistance, that double top there at 126. I can take it across there to the top of those two rather big candles, the blue and the red here, okay? So that's your resistance, that's your support. Obviously, here is the gap, okay? So in terms of a target, where are we going to go for? Well, the gap is at 118, isn't it? So you cross three candles there. So that is going to be the minimum downside target. I personally think we could run on all the way to 114. Just gives us the big levels, 118, 124, 126. And let's move to the daily chart. We are on the Euro JPY daily chart, and what we know from the weekly chart is that 126 is resistance. Now, that's that double top there. Now, in terms of this chart formation, I really like it. Yeah, we had this nice downtrend, then we had a building of a base, then a gap higher, nice big move up, and now we're traveling sideways. Last week, volatility has dropped. Okay, volatility dropping normally points to a big move. It could be, of course, either way. My own view is obviously it's going to be to the downside. Now, in terms of where we're sitting now, we're just around this 20-day moving average. So that gets taken out. We know from the weekly chart 124 is the key support level. So what you could do is, let's say she comes through 124 decisively, we'd expect an uptick in volatility or move up in volatility, move to the downside. So you put your stop behind 125 or these two candle bodies there, yeah? Okay, if she rallies up to here, I'd look for the rally to fail. Okay, so what you can do is take on a break of 124, stop well back from 125, or if she goes up to 126, look for the rally to fail. We know that the commercials are basically, really selling the euro at the moment. They're not going to stop selling it at the moment, in our view. So she's a sell on the rallies or on the break lower. Now, I'm going obviously for a filling of the gap down at 118. This whole move higher doesn't make sense to us. Of course, it doesn't have to make sense in terms of the market, but I'm going for 118. I don't think this time around we're going to bounce from the 20-day moving average. Obviously, what we're going to do is when this move, if it does occur, happens, we'll be tracking it daily anyway. But yeah, the low volatility now points to a big move. And I'm pretty sure in my own head, probably proved wrong now I've said that, that it'll be to the downside. So we really like the potential downside in this pair. Weekly chart, this is just to see the bigger levels and our longer term target in this pair, which is we're looking for 106. There's the Trump rally breakout. We think it will all be retraced, and that was our view when we got up to 118. Now, in terms of this 118 level where we topped out into, commercials went heavily short. That gave us the confidence to come in short, broke the 20-week moving average, went to oversold here, you can see it, and we come back to test the 20-week moving average. Now, when we're down here, the commercials really got out of their UST shorts, okay, and covered them. They started to rebuild them now, so they're coming in short around the 20-week moving average. And this week's ratios, non-commercials 2-1, favour of longs over shorts. Commercials 1.9 to 1 in favour of shorts over longs. We've got a ratio divergence of 4 to 1. It's not a huge divergence, but the commercials favour the short side. And yeah, like I said, 106 is the target. Where is the resistance? Well, it's going to be here, isn't it? So you're going to be looking at 112, also a round number, last week's high as well. So I think that is good resistance. This is the first target. If we do get a move from risk off, though, we're easily going to go down to the 100 level. So that's the weekly chart. Let's move to the daily chart. The daily chart of USD JPY. What we saw here, nice big red candle down through the 20-day moving average, kind of going a little bit sideways with a downward bias at the moment. 20-day moving average is obviously snaking down. We know 112 is a key level from the weekly chart. And you've got 4 candle bodies there providing resistance for the 20-day right behind. Obviously that's going to snake down if we do move lower. Also you've got diagonal trend line there across those 2 candles. So you've got double trend line resistance to the 20-day moving average. That's going to provide good resistance in our view. So if we rally up towards 112, you look to sell her with a stop well back from the round number. But what if she doesn't rally? Yeah, she looks pretty weak on Friday. You got a spike low here, okay? Now, would I sell through that spike low? I probably wouldn't, actually. I would actually wait a bit longer for the 110 level to be decisively taken out. Yeah, just get past the round number. I think if we took out the 110 level, then we could run on to what is the first level of support on the pair, which is 108.30. These 2 candle bottoms here. Obviously, from the weekly chart, we saw we got a move. We got a target of 106. I do think we are going down there. Now, from our perspective, obviously this will change as the market action unfolds next week. But she definitely a sell on the rallies back to 112. And at the moment, I do see her as a sell on a decisive break of the 110 level as well. That's obviously the more harder psychological trade to take. You would just see, what happens next week. Also, if you did come through 110, stop will be back behind these 2 candle bodies here, in my view. I think we're going to be going down. If I was to, give my view now, do I think we're going to break lower first or rally higher? I think we'll rally higher, and that rally would be a selling opportunity. All right, let's move to the next chart. On AUD JPY weekly, and you can see we've got a little bit of a channel here between around just below 88 to just below 82. Now, in terms of CFTC net traders ratios, non-commercials 3.3 to 1 in terms of longs over shorts, sorry, commercials, 0.7 to 1 in terms of shorts over longs. So their position is pretty small at the moment. Ratio overall, though, 4.1 in terms of divergence. Now, we do know up into the 88 level, the commercials really hammered the Aussie, and obviously we've come down, but we're at a key support level now. And the commercials have not really added to their shorts. But what we do know, in terms of how they've been moving, they will do so on a rally. Now, we've got 84 and then the 20-week moving average. So if we do that, 20-week moving average for us is the line in the sand, 84.73. Also cuts with 3 bodies, 1, 2, 3 here. Okay, so we can have double trend line resistance. Okay, that is, you know, a sell on the rallies. Yeah, you'd be able to go to the daily chart and show you how you might want to do it. So on the rallies, a sell. Now this is a key support level, like we've been saying for a while. If there is a big move from risk, obviously the yen will soar. She's gonna, yeah, if the Aussie breaks here, she's quickly going to go down to here. This will be our longer term target. Sorry, I can't draw a straight line. 76. So plenty of downside potential in this one. Let's just shift to the daily chart and see how that lines up. AUD JPY daily. We noted that 84 is the resistance level on the weekly chart, and that's where this big red candle comes to the downside. Come back up, try and test it, and we fail. Okay, now in terms of us selling this on a rally, I wouldn't bother waiting for the 84 level. I'd basically do that. Okay, sell back to the 20. You've got a diagonal trend line there as well, and you also got a straight, which we always like, which is there. Okay, so sorry, I can never draw straight lines, can I? So basically, you got 83.20 up back towards the 83 level. She's a sell. Now, if she doesn't rally, where are you going to take her? Okay, you got basically these two candle bottoms here. So really below 81.50. Would you come in through these three? I'd probably just wait a little bit and wait for that nearby support to be decisively taken out. In terms of your stop, you want to be back behind the 20-day moving average if we break lower. So it's obviously going to snake down. If we break lower, 20-day moving average is going to move below 83. Stop well back behind 83. And remember, this one does go to plan, so to speak. Plenty of downside potential. So that's AUD JPY. Let's shift on to the next chart. We are on MXN JPY weekly. Now, in terms of this, I'm just going to look at the ratios first. Non-commercials 5.2 to 1 in terms of longs over shorts. Commercials 3.9 to 1 in terms of shorts over longs. A nice divergence there of 9 to 1. Yeah, just generally now we are seeing the commercials pile in to MXN shorts. They're doing it on the USD. They're also doing it on the JPY. Now, in terms of MXN JPY, pip spreads are actually okay on this one. And I think, yeah, it offers really good potential if your broker trades it. Now, in terms of resistance, yeah, you can see that the longer term trend is down. We've seen a bit of a rally. And, yeah, I would say that this is now pretty good resistance, okay? We're starting to top out into the 6.0 level or 6.0 level. Okay, get across it, and now we're sort of coming down. Yeah, we're struggling basically. So double top there here. Now look at the 20-week moving average. We've stabbed down to test it and haven't taken it out. Now my own view is that, you know, sorry if I draw a trend line up, that 20-week moving average, if we break beneath that, then we are going down, okay, and we're going to be going down to 5. Okay, so plenty of downside potential. So for us, we know that if, you know, the MXN keeps rallying, the commercials are going to keep loading into shorts, and yeah, sell on the rallies, or she's a sell on a break to the downside of the 20-week at 5.70, sorry. Let's move to the daily chart and see how we're shaping up there. Sorry, MXN JPY daily. We did say, obviously, the 610 level had been tested. So, sorry, if I draw a straight line. Okay, so we'd come up to test the 610 level, and now we've got back below that key 6 level. I think, yeah, if we do that, we've got, sorry, my line isn't quite correct, is it? So there we go. We've got down sloping trend line, 20-day moving average there as well. Double top 6, so we draw straight, got double trend line resistance. We rally back towards this level. She's a sell in our view, stop back behind this level. Key level of support in my view is here, if I've drawn that correctly. Okay, so sorry, I never draw a straight line. There we go. So basically, I think if we take out the support line below the 578 level, I'm going to ignore that tail, actually. I don't think if we do go through the level, we are going to basically come back this time. So she's a sell for a move down to this level, in my view. This breaks though. We saw, the longer term target from the weekly chart. You can't really see much from the daily chart. What we got here in the last few months, even if it got to here, it'd be a nice move, wouldn't it? I think that's about 521. So plenty of downside. Now, obviously, you can aim for this, okay? Obviously, when this level breaks, you're going to have the 20-day snake down behind. I don't know how the price action is actually going to pan out yet, but that's where your stop would be. So, I think this one is getting ready for a big move to the downside. And in terms of this chart, if you look at it, it's pretty messy, isn't it? It really, from a technical perspective, only makes sense to me when I'm looking at the big fundamentals and I've got the CFTCs on my side. So that completes the 4 chart setups. We'll come back off that short analysis there of 4 major Forex pairs. Now that is my view as of right now. It can change in line with the market conditions, of course. If you want our full trading techniques and our daily technical analysis of major Forex pairs, simply click on the link beneath this video. Now, just before I move to talking a little bit about Occam's razor, I just want to make a quick point about the fundamentals that are driving the Japanese yen, in my view, which I think the commercials have got in mind. Now, if you think about it, stock markets, they're really bullish at the moment, new multi-year highs, yet the yen isn't falling, and it's a safe haven currency, so it's holding firm. And I think the reason for that is basically over the last few weeks, we've seen some really good economic data out of Japan. So the economy is picking up, it's holding the yen firm. And of course, if we do get a move from risk, and I think, stock markets, they're going to break at some point, Japanese yen is going to soar on every major currency. So I think that's why, the commercials have got a bullish bias on the yen. I might be wrong, of course, but that's what I think it could be. Right, now, in terms of Occam's razor, what is it? I did a short video on it a while ago. I'm going to do another longer one, which also covers another very important theory for traders to keep in mind, which is Bayes' theory. But in terms of Occam's razor, it was devised by a 15th century Franciscan friar by the name of William of Occam. And he basically postulated that if you've got 2 competing explanations, simplest is going to be the best. And in fact, the simplest explanation is always the best, okay? When you're reaching a conclusion in anything, so don't overcomplicate things. So you might be thinking, that sounds pretty basic advice, but William of Ockham is hugely influential in terms of great thinkers and great Forex traders. Now, people who've made reference to him as being an influence on them would include people like Albert Einstein, Leibniz, Stephen Hawking, some of the great thinkers of all time. And, in terms of Forex traders, it's very interested to read Ed Thorpe's autobiography, fantastic book called A Man for All Markets. And Thorpe is seen as a quant genius. He's undoubtedly the grandfather of the quants or algorithmic trading, one of the greatest traders of all time. He was saying when he first started putting algorithms together in the Forex markets, or in financial markets generally, he was making them too complicated. And then he read Occam's razor and thought, this makes perfect sense, simplified the algorithms down. And then, of course, it obviously made huge amounts of money. Now, you've got to keep in mind that Ed Thorpe is a mathematical genius, but he's not overcomplicating his algorithms. Now, in terms of the razor, Occam's razor, the razor actually means just take out anything that you don't need, okay? Keep it simple. It makes sense because, if you think about it, if you make a strategy too complicated, it's got too many inputs to reach a conclusion, a trading signal, it's going to have too many elements to break, isn't it? The simpler it is, the better. And you'll find that, great Forex traders do not have complicated methods. Now, I mentioned Thorpe being influenced by Occam's razor. I can take a big hedge fund, one of the biggest in the world, Rentec, influenced by that, and Bayes' theory. Keep it simple. What you want is a simple, robust strategy. Now, it's all well and good keeping things simple, but you've got to base it on logic that is soundly based and you understand and have confidence in. Now, for me, CFTC net traders big levels on the chart, yeah, sure, it can go wrong. But if you were to test that backwards, it would stand up to testing. Okay, and one of the things I'm kind of, everyone knows I'm kind of anti-pattern trading. People say, why? Well, there's too many variables, there's too many inputs. Also, it's based upon prediction. Yeah, we deal in a probability-based market, not a predictive market. So you've got to get something that is simple, and then you must be able to, see the logic as, soundly based and have confidence in it to make money. So that's my view. I'm going to do a longer video on Occam's razor combined with my, one of my favourite theories, which is Bayes' theory. Well, I actually like both of them. Fantastic theories, and you'll see why they're so good when I do the video. So we'll do that within the next week or so. Right, that is the video for today. Thanks for watching me as usual. Take care. Have a good day.